please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and good morning. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Center. I am Anisha Jain, and cutting with me the Monday morning blues is Nigel Dsouza. Well, Nigel, good morning. For most part of last week, we were trading in a narrow range. It was only on Friday that we broke out of 10,400 on the Nifty, and the mid-cap index hit a record high, and that on account of the expectation that S&P will upgrade the rating for India. Now, that has not come about. Let's see how the markets react to that today.
Absolutely, Anisha. Very good morning, first of all. As you said, yes, it's a typical bull market. We have bounced back close to around 270 points from the lows that we saw. So things looking rather interesting. Last week, we were looking at S&P. Well, this week, we're looking at the expiry. And the second factor is the GDP reading. Both those two will be out at the end of this week. So fasten your seat belts. It's going to be a rather interesting one. Take a quick check on the Asian markets. Asian markets, well, they're more or less mixed. The Japanese index is trading higher in trade. That's on the back of the move that we're seeing in the yen. It's moved a tad bit, some weakness being seen on the yen currently, as flat as can be. But in fact, the Nikkei, I think if we pull up the intraday chart, it'll be rather interesting. Because just around a few minutes back, that was trading in the green. And that's moved into the red. So that's not very good news. We'll try to pull up the intraday chart of the Nikkei. The Kospi, as it is, was trading with a cut of around 0.3, around 0.4%. So the Nikkei, in fact, has definitely seen a cut of more than 0.5% from the high point of the day. So there is some signs of weakness in the Japanese market. The Kospi was always trading in the red from the word go. So let's pull up the intraday chart or the plate of the Kospi. The Korean market, that was down 0.3, 0.4%. That as well has moved to the low point of the day. Oopsie daisy. So it's looking like a rather weak start for the Asian markets today. Maybe we should get the Straits and the Taiwanese index as well up for you on the screen. Let's see how those markets have opened up. In fact, they'll be more or less flattish because they have not really traded for very, very long. But the Japanese and the Korean markets, both of them are seeing some selling pressure. And that could mean that the SGX Nifty is indicating that we start off on the back foot. So let's see what the early indications are. Maybe, in fact, a 40-point downtick is what we could see when we kickstart trade in the next couple of hours. Anisha, interesting start.
Well, yes, it looks like it's going to be a weak start, and that is what the cue is coming from Asia. But on Wall Street, the US equities rose on Friday with the S&P 500 hitting record highs, rising around 0.2% at close. The Nasdaq Composite climbed around 0.3%, while the Dow Jones rose around 32 points to end near a record closing high. Black Friday and Thanksgiving online sales in the United States surged to record highs as shoppers bagged deep discounts and bought more on their mobile services.
Okay, then turning our attention to the European markets. So those markets as well, they ended on a mixed note. Remember, political uncertainty lingers on in the Eurozone, and that's precisely what we saw. The DAX, that's the one that's in trouble. This political uncertainty in the German markets, that's brushing all of that aside. Yet again, that market ended with a gain of around 0.4%. The FTSE was a relative underperformer in trade. Market players, they monitored the developments that are taking place not just in Germany, but also in Ireland in terms of political uncertainty. Well, in Germany, though, the Social Democrats are under pressure to enter coalition talks with Chancellor Angela Merkel and also avoid new elections. Merkel has been scrambling to avoid snap elections after talks to form a new government with the pro-business Free Democrats and the left-leaning Greens broke down a week ago. However, hopes remain that Germany's political situation on Sunday, as the leader of Angela Merkel's sister CSU party, said a renewed grand coalition is the best option for the country. A breakthrough could come on Thursday when German president holds talks between Merkel, the leader of the CSU party, as well as the SPD chief Martin Schulz.
Okay, let's shift focus to the currency space then. The dollar was softer against a basket of major currencies, trading near its lowest in around 8 weeks. This week, the changing of the guard at the Federal Reserve will be a big focus for the investors. Meanwhile, the South African rand halted its slide triggered by S&P Global Ratings, cutting the country's local currency debt to junk on Friday, sending the currency 2% lower.
Okay, turning our attention then to the world of commodities. Crude oil prices are stable after hitting fresh two-year highs on Friday as continued shutdown of US-Canada pipeline triggered supply concerns, while the prospect of OPEC extending production cuts when the group meets later this week on November 30th, that as well bodes well for oil. Currently, Brent crude prices holding a tad bit below that $64 per barrel.
And from the precious metal space, gold prices were steady early trade as the dollar held close to a two-month low hit in the previous session against a basket of major currencies. The buying of physical gold remained muted as higher prices dented demand, though seasonal demand could boost activity in China next month.
All right then, and there is no end in sight to the Bitcoin rally. The largest cryptocurrency soared through the $9,000 for the first time. That's less than a week after topping $8,000 and taking its year-to-date increase to around 850%. The market seems to be largely ignoring warnings of an asset bubble as Bitcoin draws greater mainstream traction and comments from Wall Street executives as well as venture capitalists. The Bitcoin, remember, has climbed more than 40% over the last couple of weeks.
Okay, Indonesian authorities raised the alert for a rumbling volcano to the highest level today and closed the international airport on the tourist island of Bali, stranding thousands of travelers. Mount Agung has been hurling ash thousands of meters into the atmosphere since Saturday, which had already forced the small international airport on the neighboring island of Lombok to close as the plumes drifted east. The National Disaster Mitigation Agency said that Bali's international airport would consider reopening tomorrow after evaluating the situation. Back home on Dalal Street, it was a session led by the bulls who pulled the markets to a two-week closing high on Friday. The Nifty breached the 10,400 level intraday but ended just 11 points shy of that level. The Sensex saw mild gains of about 0.3% as well. The star of Friday's session was the mid-cap index rally closing at that record high level, just 16 points shy of the 20,000 mark. Banks relatively underperformed, ending just with mild gains. But how the Q stacked up for today? Nigel, the Asian markets were signifying a red. Let's see how the markets open. That's
right, Anisha. You should get that up for you on the screen. The Japanese index, the Kospi, as well as the SGX Nifty, all of them indicate that we're likely to see some red on the screen. So let's see. The 30-40 point downtick is what we could bracing ourselves for. Remember, the Nifty has been on a winning streak, 7 sessions on the trot. We have been winning. The Nifty is up close to 270 points. So to put things into context, really, we saw a bit of a correction, very, very shallow correction. The Nifty corrected close to around 370 points approximately. And from there, after the 370 point correction from the mark of around 10,490, well, the Nifty pulled back more than 70% of its gains. If you just take a look at it, we corrected 370 points. We're already up 270 points from those lows. So we should get that as well up for you on the screen. And if you take a look at it from November 15th, that's from where we started bouncing back. You have made big gains on some of these frontline stocks. Sun Pharma, that's given you 9% returns. Reliance Industries and Infosys as well. Out of nowhere, that's come in to bat for the bulls. But if you're looking at these large caps and saying, well, you made plenty of money, take a look at some of those mid-cap stocks that have made big money. Not just mid-caps, but Tata Power, for example. That stock's not moved in many years. Suddenly, you're getting a 14% gain or there. We have an HSBC note as well that's upgraded the stock. But that one, out of nowhere, in fact, has given you some returns. In terms of Friday's trading session, you look at the fund flow picture. Well, the FIs and the DIs, they more or less netted off each other because the FI sold, the DI is bought, so they took care of each other. But the FIs on the index futures, they bought close to around 350 crores. Now, that's a bit of a positive getting into an expiry week. Because if you just take a look at it, 350 crores is what they bought. That would account for nearly around 4,500 future contracts. In short, what they are adding more longs than shorts. So in last week itself, you just pull up a plate, you'll see the FIs added 10,000 on the long side, 10,000 contracts on the long side, while on the short side, they're closing some of their shorts, and that explains why, in fact, we did see a bit of a bounce. So now the long positions are more than short positions. When we started last week, well, in fact, at that point of time, they were absolutely, one short for one long. Well, that's an interesting one, and that's rather, something that gives the bulls, a lot of comfort, because now we are seeing that they have been writing puts. the total puts that were written last week, that was up by close to around 30%. That's around 59,000 contracts, which clearly tells you that the bulls are going to go ahead, Anisha, and defend the lows that we recently saw. If we're looking out at levels, well, the all-time high, 10,490, that's the level that you should see quite a lot of resistance on the upside. And we're going to be starting off closer towards the 20 DMA, 10,324. That's what the SGX Nifty is indicating. And we have got big cues this week. One is the expiry, and an expiry, in fact, the Nifty decides to do its own jig. So we'll see volumes as well pick up. And GDP data as well, November 30th. We'll be looking out for that data. Remember, it's supposed to show an improvement in comparison to the first quarter GDP number that we got. But Asian markets in a bit of a tizzy. I think the bulls will be a little nervous to start off trade, but let's see where we go from there.
Okay, so a little nervous when we start off the trade. And remember, another important key to watch out this week is the OPEC meet, which is lined up for this week. Crude also, of course, will be in focus. But what are the other stocks that we should look out for today?
Well, we're waiting for S&P.
Yes.
And S&P, they had their say, that's post-market close. They've not really changed anything. The Nifty Bank was factoring in, some change, some positive. So let's keep an eye out on that one. Even some of these NBFCs will be in focus, so we'll keep an eye out on them. In terms of the derivatives market, well, we've got a new stock in the ban. GMR's come into the ban. You've seen a lot of accumulation over there. The stock was up close to around 10%. And after a long time, or I think one of the first times that I've seen a PSU banking stock getting into this F&O ban, that's Syndicate Bank. So we'll keep an eye out on that one. Well, the DLF came out of the ban, so we should keep an eye out on that one. And TV18 broadcasts, the owner and producer, of the channel that you're currently watching. So that as well did see a big run at a 52-week high. So we'll keep an eye out on that stock. Sun Pharma, they've issued some voluntary nationwide recall of one of their drugs, that's Riomet. Though in fact they're not the producer of it, they're into contract manufacturing. So that one, in fact, it's manufactured by the contract manufacturer. So Ekta tells us no impact on sales. Keep an eye out on that one. Quest Corp, they've got into an agreement to acquire one of those companies. Keep an eye out on that stock. And GPT Infra, that one, in fact, they have been awarded a claim of around 62 crores by a 3-member arbitral tribunal. So I think, Anisha, the market cap is 550 crores. The stock was already up close to around 10%. So 10% of the market capitalization. Keep an eye on that one as well. Well, the big story this morning, dashing hopes of yet another rating upgrade within a week. Rating agency S&P has maintained India's rating at BBB- and also kept its India outlook unchanged at stable. In fact, S&P has listed the key factors that have influenced this decision. To count the positives first, the rating agency says that India is expected to clock strong growth over the next couple of years.
Okay, and India is also likely to maintain a sound external accounts position, which means that India's foreign exchange reserves will continue to rise. But on the flip side, S&P believes that the sizable fiscal deficits and high government debt burden are some key risks to the India's credit profile. S&P also says that low per capita income is also a negative for the Indian economy. We spoke to Ravi Bhatia, the director of sovereign ratings at S&P Rating Services. Let's listen into what he had to say.
The growth story is good, but we've seen a bit of wobbles at the moment with a couple of quarters of slower growth. The reform momentum has actually been good. I mean, there's been a whole host of reforms pushed through. But again, there have been some sort of teething problems on the reforms as well. India has a number of strengths. I mean, as we mentioned in the report, the external story is really looking quite strong these days. Current account deficits are low. That's partially helped by the recent years of lower oil prices. And also the reserve story is really good with over 6 months of import cover. We look across the board at various factors: institutional, economic, GDP per capita, monetary, fiscal and external. And India has definitely got some strengths. External is very strong. Fiscal is weak. So it's a combination of factors, and our criteria are comparative across all countries. So we use the same framework for all countries, really. We look at deficits, fiscal deficits on a consolidated basis. That is adding the, or what we call general government basis, which is adding the states and the center together. And still, when we combine the two, the deficits are high. India issues most of its debt domestically, so there isn't really an exchange rate risk there. And also, as you say, they're on this glide path, so hopefully the deficits in terms of stocks will come down, and we'll be watching that. Broadly, the plan looks good, really. The banks have been suffering. There has been this issue of NPLs. They've needed the recap to reach the Basel III, to meet the Basel III requirements. So this plan is broadly good. And also lending has been weak, so hopefully this should help that. Although, I mean, we have concerns also on the demand side that lending is really it's not only been a supply side and credit supply issue, it's also been a weakness on the demand side. But broadly, we're expecting an improvement. Certainly, there are downside risks. We could see a weaker consumption. We could see the impact of higher oil prices going ahead. There are a number of risks. I mean, if the banking situation doesn't improve as we planned. And of course, in terms of risk to our rating specifically, I mean, we're watching the fiscal carefully and how that pans out.
Okay, Lata Venkatesh joins us now for what could this mean for the markets today. Lata, good morning, over to you. Do you think this is something which has already been factored in by the markets and they will be disappointed today?
No, I don't think. At least the bond markets were not talking about given as an S&P status quo. There were incipient hopes that they would at least make it to a positive, which means you're in the front foot for an upgrade later on. There were widespread expectations when one rating agency puts you in a higher category altogether, Baa2, and the other one has not even put you in positive outlook. The expectation at least was that would happen. But S&P looks for results, their weighting is more on fiscal deficit. They don't look so much at growth and other parameters. They look very clearly at whether the fiscal deficit is improved. And as we've always been saying in our peer group, we don't fare very well in terms of debt to GDP. We are at 69%. The peer group is at 40%. So we have a distance to go as well. In fact, Ravi Bhatia also said at least you should be under 60 to be able to lay claims. So we have a distance as well. Of course, the fiscal deficit is close to 7% if you count center and states. Now, the bond market, bonds yields fall when two rating agencies give you the same rating. I mean, if you're going for instance, you trying to raise money, if two rating agencies give you a certain rating, it has validity, and definitely the market shows the impact. So now Indian companies will not be able to raise money any cheaper than they were up until Thursday because we did not get the second rating. So to that extent, there will be disappointment, and I think that will be felt even in the Nifty Bank. But primarily bond yields, 10-year bond yields should rise by about 3 to 5 basis points. So 703 or thereabouts is very much, 703, 705 is very much on the cards, and that has a concomitant impact on bank stocks because for them it's mark-to-market losses. Correct. As well as for NBFCs. It will mean along the curve their cost of money moves up a little. So a sentimental negative is definitely there for both these categories, banks and NBFCs. Rupee may open a little lower, maybe 64.50, 64.60 thereabouts, but that will really be a creature of how the dollar index does.
Okay, all right, Lata, thanks so much for that. Well, so the bonds will be fair more sensitive to this piece of news. On that note, let's listen in to what top government officials and ministers had to say with regard to this.
We are very extremely delighted that Standard & Poor has chosen to affirm their ratings. They have chosen to affirm the stable outlook for Government of India, and in the report have profusely praised the efforts of the Modi government, have mentioned almost across the report about different measures that the Government of India has taken for strengthening the long-term economic prospects of the economy. If you will look at any rating, after the broad guidelines of what is the rating, they always have this caveat that these are the things that should be watched out for. So even Moody's, when it upgraded, they spoke about the fact that the debt to GDP ratio will be watched.
There is the intrinsic strength of Indian economy are pretty good. The public to GDP ratio is really very, very comfortable. We have very good foreign exchange reserves. We have got a very good savings rate. our external situation is far, far better. And therefore, in my opinion, India's sovereign situation is pretty strong. Therefore, I think we are on a very, very strong wicket.
Per capita income is certainly an important ingredient into the ratings of some rating agencies. Ultimately, we think it's unfair because obviously, there's nothing much we can do about our per capita income in the short to medium term. In the very long term, of course, hopefully our per capita income will go up. But we feel that that is neither a reflection on our ability nor our willingness to pay.
My big concerns have been that there are now reforms. My feeling has been that there have been reforms to improve the productivity levels in the economy. There are major steps being taken to debottleneck the infrastructure sector. There are the household savings only picking up. The capital market, except for credit offtake from public sector banks, has been robust. So I am not sure at all as to why S&P would not, why S&P think there is no upward pressure on the ratings. I think there should be.
India has one of the highest sort of growth rates in the world now, and highest sort of potential growth rate, the young population. And that means that the debt ratio is well set towards reducing, right? Because the real interest rate is much lower than the growth rate. And the fiscal deficit also, the government has demonstrated its commitment towards the consolidation path, committed to the FRBN. So, and also debt ratio as it is in India is much lower than it is in many Western economies, although it's larger than some East Asian.
For revitalizing its brownfield assets, it has also said that private companies mostly focus on maximizing profits, and ONGC has gotten these oil fields in the past when there were no investors for the upstream projects like oil fields. So we understand that this policy is still being mulled by government for the 60% stake to the private companies in the oil fields of underperforming assets of ONGC. We'll have to see how the government intervention helps. Back to you.
Okay, all right. Thanks so much, Anshu, for joining in and giving us those details. Well, let's talk about the big performer in the recent pullback, Sun Pharma. That one, in fact, has gained close to 9 to around 10% just from November 15th onwards. Now, in fact, news that's coming over the weekend, Sun Pharma has initiated a voluntary national recall of a diabetes drug, Riomet. Ekta Batra is with us early this morning. Ekta, what does it mean for Sun Pharma?
Well, Nigel, morning. It's actually just a voluntary recall which is taking place by Sun Pharma for a very, just 2 lots of a diabetes drug called Riomet generic, like you mentioned. So it really shouldn't hit in terms of fundamental impact or in terms of sales. Firstly, it is also a voluntary recall plus a class 2 recall, which means that there's no adverse impact, which is would be in terms of health or safety on account of usage of this drug. So the reason why they've announced it to the exchanges is because it is a medical reason for the recall. So there is some amount of contamination which has taken place in these 2 lots. And it's important to note that it is also by a contract manufacturer. It's not developed directly by Sun. It's also developed by a contract manufacturer, and hence it should just be a sentiment negative. It should not impact the fundamentals of Sun Pharma at all. The reason why generally we don't see these kind of recalls coming up as a BSE announcement to the exchanges is because it's normal course of business. Maybe for this one, because it's a microbiological contamination of the drug, and hence there could be some amount of medical safety purposes which you need to undertake, for patients who are probably exposed to the drug. That's probably one of the reasons why they've made this particular announcement. But overall, it should be a sentiment negative.